Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I don't know if you could hear the sound on the intro. I hope that worked better this time for you guys. Anyways, I'm a little bit late, but we do have some numbers coming up here in a second, so I'll try and go through this really quickly. Looks like we got some rollover notifications. All right, so coming over into the volume profile, treasuries. Well, treasuries had a pretty decent down day yesterday that I didn't really participate in. Now this morning overnight, they're really like, ooh. So now on one hand, this kind of makes me question how much more downside we can actually have today. But on the other hand, we've got like FOMC minutes today at noon. And I sure wouldn't want to be long treasuries when that release hits. So maybe this just keeps trending all day. I don't know. I kind of expect that we might have a little bit of a slow session though in the treasuries because of that. S&P 500 falling overnight. There was a real change in the market yesterday. This I mean, in the larger scheme of things, this downturn at the end of the day in the equity index doesn't seem so significant, but I've definitely seen a shift in sentiment overall. So while I think that there might still be people out there to buy going maybe even into the month end, who knows, but like the traders and stuff have all just turned extremely bearish all of a sudden. Like it seems like everybody believes that 4,300 is just that there won't be able to keep that. So we are turning down, and I think that if I was trading, I'd be trading the short side in the ES, but we'll see. Here is oil. Oil still struggling here at 86. Natural gas taking a jump here the past 2 days. Gold and silver getting hammered as the dollar becomes the flight to safety. Oh, copper. Well, copper's okay. So maybe the world will be okay as long as copper is kind of going sideways. I'm usually like, okay, like it might be okay. Like, here's the thing, things are looking pretty crazy in China right now, right? But copper's doing okay, so okay. Bitcoin struggling a little bit too with the stronger dollar here. I mean, but it's not like the dollar's like insane or anything. Well, I mean, 106.6 is high, but it's not much more than what it was yesterday, right? So which that Bitcoin will come over here. So we do have some numbers coming up. We're gonna get US retail sales month over month. We're looking for a reading of spot 1% with core retail sales negative spot 1%. So this is a pretty high tier news release that we get. So I do expect the markets to pull. I mean, look, the liquidity is already light. They were even before a minute, usually a minute before the robots will pull, but like the liquidity was already pretty light, right? So this is definitely going to be a market moving data release. How are you guys doing? Good morning, Uzi. Good morning, Lean. I feel like, well, I don't know today. I didn't sleep very well last night. I just didn't, and that's a big part, you know. I had this thread on Twitter yesterday about like the mental aspect of trading, and it's like, well, you know, the biggest thing to help the mental aspect of trading is to have an actual edge, right? And after that, then it's just being at your best and being able to execute on your edge. But you know, I think a part of that mental aspect is knowing when you're on your game and when you're not. And I don't think I was on my game yesterday, even though I was reading the action pretty good. and I'm unlikely to be on my game here this morning. So got to factor that in here, but we will probably get some opportunities. Okay, so there's the number release. So this is a decent amount of volume spat out there in the treasury. Wow. Okay, so core retail sales was spot 4 versus an expected negative spot 1, and US retail sales month over month was 0 versus spot 1. So the core number higher than expected. We're gonna have to go in and read this report. That is very interesting. But I would expect the headline number to be a little bit lower because that has more to do with energy and cars and stuff, right? Oh, I don't have my thing set up correctly over here. Retail sales detail. Let's go read the latest release from the census. Retail, when is it? Advance monthly retail trade report. I don't look at this report as often. I thought that there was one that was, there's a revision. I guess you just get the time series on this one. Would that affect the market to the moon? For sure. Well, that was a weird spike, man. I think that means that the algorithms disagreed on what that release meant. But I think that core number matters, right? So here again, automobile sales account for about 20% of retail sales, but they tend to be very volatile and distort the underlying trend. The core data is therefore thought to be a better gauge of spending trends. So it's X auto sales. So sales being really good after you discount autos, I think that would be bearish treasuries. So I'm gonna take here. I'm really worried about my performance. So let's take a trade here with a sim count first and kind of fill the market out. The S&P 500 is selling off on this. It very much feels like bad news is, or good news is bad, right? Good news is bad. It seems like it's difficult to keep things straight these days, don't you think? I've been doing a little bit better with Twitter lately. Yeah, I posted a little tweet there yesterday, and it got a lot of good interaction with it and followers and stuff. What the heck? This guy's name is Trade with UFOs? What? Okay, so should I add? I don't know about that particular price. 22 was kind of the thing earlier. The liquidity and the volume aren't really giving me much to go off of here. That price does seem to have volume going through it, so okay. So even though I have some hopes for this trade here, that coming back up to 23, that's not what I want to see. Let's see here. So if we come over and look at the markets overall, who are our biggest winners and losers? Well, of course, silver is our biggest loser, followed by the RTY. That's the Russell 3000 and NQ. So tech are getting hit particularly hard. Soybeans and corn, the leaders today, 1% rise in those commodities, but they were falling yesterday, weren't they? Numero tray here. What do you mean by that, little goldfish? So I don't see the long here. It's coming up to the high of that. Why is that a long? Why would that mean the Federal Reserve back off? Does it say something about inflation that I don't understand or I'm forgetting? Oh boy. Shipping halted on the Rhine near Kabob choke point due to distressed barge blocking waterway. Well, I should have predicted that one because they were talking about the Rhine and all that stuff. That's not right. This stream is this song is called "The Best Way to Grow on Twitch." Apparently. Futures tumble after UK double-digit inflation sparks surge in yields. Ah, okay, so maybe the yields were pushing down because of those British inflation numbers. Why did I not pick that up in my read of events from earlier? But I don't see why this right here would say lower yields. That doesn't make much sense to me. Russia forecasts export gas price will more than double in 2022, according to Reuters. Well, oil isn't moving much off of that, but I think the issue, I see here. Oh, number 3. Oh, gotcha. I'm so dumb, guys. You see, I'm just not on. That's the deal. I'm not 100%, I don't think. This right here, maybe I should be giving up. I don't know. Oh, there's a big order. There's a big order up there at 28. Why would there be a big order at 28? Huh. Okay, my news squawk is just telling me something about the probability of the September hike that didn't quite line up with what I thought it would be. So let's come over and pull up the FedWatch tool. All right. See me FedWatch. Okay, so we're looking at the September number. Let's compare probabilities. Oh, compare. There we go. So 275 would be a 50 basis point hike, and 3 would be the 75 basis point hike. It seems that they are leaning more, that there has been a change in the past day. I guess there's been a change in the past day, probably because of those UK numbers, that they think that the 75 basis point hike is more likely now, although it's awfully close at the moment, I must say. We do get another CPI before the next one, don't we? Let me verify that. I'm pretty sure that was the case though, because I remember Howell talking about next month. Yeah, there's CPI on the 13th. And then, oh, that's not good. Okay. So let me put it out here in the calendar so you can see why I just said that. So the inflation numbers are on the 13th. And the Fed meeting is on the 21st, right? So the blackout period is 2 Saturdays before. So the CPI will come out during the Fed blackout period again. That'll be a mess. Especially, and now you got a market that is unsure about whether it will be a 50 or a 75 basis point hike. And then you're throwing that in there. There's going to be a lot more uncertainty around the next Fed meeting, possibly. Possibly. That doesn't look good. But they are increasing their expectations because of inflation in the UK. But why, again, why the rise here after the retail sales number? I ain't got no... Okay, here we go. U.S. headline retail sales drop in July. Core soars. Let's read the zero hedge story, see if there was something inside the numbers that maybe we missed. Analysts were almost right with the headline, actually unchanged month over month, but X autos up 0.7% month over month versus 0.4% expected. No, that's not what I got. It was negative 0.1 and it actual was 0.4. So, okay. Pretty much everything was higher apart from autos, gasoline, and general merchandise stores. So everything going well, that would suggest higher prices in the future and higher interest rates as a result. But the market is backing off the interest rates. Notional retail sales have not fallen for 7 straight months, which pushed the year-over-year retail sales growth higher for both headline and core. Finally, after 4 straight months, real retail sales drops. Real retail sales were flat in July. This is core retail sales minus CPI, which admittedly is not apples to oranges, but is good enough for government work to get an idea of the actual changes in spending. Furthermore, notional retail sales are increasingly being funded by soaring credit card debt, not exactly a sign of confidence by the consumer, more a sign. Okay, so that's enough for me to be like, no, I'm out. I think I see what it's saying here. Okay. After 4 straight months, real retail sales drops. And here's the data series. Real retail sales were flat in July, which admittedly is not apples to oranges, but is good enough for government work to get an idea of the actual changes in spending. So what they're saying is that these retail sales numbers kind of, if you balance them out with the real retail sales, then the number is actually 0. Suggesting that people's buying is decreasing or at the very least, flatlining. And that would be dovish. So maybe that's why they are making this move that is confusing me a little bit. That seems like the best explanation that I have at the moment. Of course, just as I bail is probably when this thing turns around on us, right? Spread in the 10-year. Well, that's interesting. The spread is actually tighter in the 2-year than it is the 10. I don't know about that one. Guys. Maybe I should just turn around and buy the 2. Well, that tick up seemed to have upset the order book somehow. I don't know how to explain it. There's some price changes that feel like more sticky. You know what I mean? Like it goes up, there's a stronger bid behind it, and like everything in the book reacts to it. But it ticked back down. We've been getting steepening here, so something's going on. 10-year down 2 ticks here. The books here in the micros kind of getting a little flaky. There's another tick and another tick, although that one's not holding. I'll reset. Well, this 24, it might be a point of interest, so. I didn't see anything too interesting volume or order book wise there at that spot, but we did end up ticking back up. 6J kind of looks pointed down still, so I do kind of have to wonder if there might be some more downside force here. The going gets tough. Do lawns have a future in the age of drought? This is pertinent to my interests, actually, because they haven't been saying anything too crazy about that sort of thing here in Utah yet, but I think it's coming. I think it's coming. My lawn has not fared too well. Okay, a little bit more absorption at 24.5 than I would have maybe thought. So like sometimes the spread really comes in here in the 2-year, and then sometimes they pull. It's a little interesting. Again, this 24.5, they haven't taken it quite yet. Okay, well they did a lure and there was iceberging there. Uptick. And iceberging at 25. Uptick. So a passive buyer here between 24 and 25.5. Still some there. It looks like it's a synthetic iceberg, and then it may still be there at 25.5. Okay, so there was an okay take. I didn't, it's still there. It's still there. So did you see how they took it and then nobody willing to offer, and then as soon as somebody did offer, he bought it and it moved back up? It's not enough for me to say, oh, like there's a strong meta order, we're going to continue trending in X direction, yada, 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 but it does kind of look like we're going to see some stops here. We started trading live and it's really stressful. It is really stressful, dude. That's for sure. Okay, was that down tick maybe? Yeah, it's not a huge offer, but I've noticed I pay way more attention to the correlated markets and individual techs. Well, when you're in a trade, you do. When you're not in a trade, your brain just doesn't focus on it quite the same. That's for sure. But that can be it's a double-edged sword because sometimes you just become hyper-focused on what you're seeing in there and you kind of lose picture of the bigger picture, and you just don't realize that you don't really have any edge in that situation, you know? So there's another downtick, but like, look at the offer, is pretty pathetic. Okay, well that was a little better after the 5-year downticked. The whatever the meta order that was buying there was, it looks like they did in fact exhaust it and they are heading down again. Ooh. So this is getting a little bit, well, I don't know how to put this. It doesn't seem to me like the treasury market is that active, but relative to how much is going through here, it is quite volatile, I would say. I guess we're having a bit of a battle, but they did shy away from the high there. Another uptick. Didn't hold the sell. Although it was curious the way that they, it was like 2 ticks. Like, it didn't take much for them to be like, okay, yeah, let's sell it. But then it did buoy back up. And there are some ticks here that seem like they're having a really hard time attracting. So like only 67 contracts. Both bid and offer there for a moment at 26F. Pushes back up. I am seeing a little bit of correlation with the Japanese yen here. Steepening. Oh, what's this? You see a speaker? Oh, about Bowman. Yeah. Okay. Yeah, he's on my squawk here, and I didn't even notice that. Yeah, I don't think I'm on today, guys. Okay, so I'm gonna bail. I sound like I'm well, my throat is a little hot. My infant has had RSV, as did the toddler. I think that they're getting over it a little bit, but so I want to believe in the short side here, but it's just not working out. I think that I'm done for the day. I think we'll watch this and see how this turns out, because I am finding this action incredibly interesting. By the way, you know, they pushed to new highs there, but the book was incredibly nonchalant about it, don't you think? Are you guys getting the same take from that, or did that break of new highs seem a little bit more exciting? To me, it was just kind of like it went. The book kind of acted like it wasn't a big deal. I'm still not seeing all that much volume come through. I think for the trade that I took, it was not a bad trade. The first one that I took obviously was terrible. The one I took on Sim. I did take a live trade there and lost a little bit, but it's okay. It does kind of seem to me that the 2-year is probably destined to go to 3.5 here. But it's going the other way. Why do you think that is? Were the retail sales number? I don't know, man. This one. I'm not going to say I've never come across this kind of situation before. This is the first time I can recall seeing something like this off of retail sales. And like, again, so it looks like that the market is going with the core, or not the core, the real retail sales. So core retail sales minus inflation. Okay, well, that's a little bit more volume there at 30. It's turning into a strong uptrend. There was like a point, so like for me, I was like, it was going okay, then I saw this iceberg. I didn't like that. I probably could have just gotten out from there and maybe saved $2 or $3, but my instrument wasn't moving so much, so I wasn't so concerned about it. I think that it was fine. But then you know, look, there was another little fall, and when that fall kind of faltered out, that's when I was like, okay, I think I have to give up on the trade here. Now that they've pushed it, so they broke the highs, it wasn't so bad. Now they took another step further than that, and now it's kind of turning a little bit exciting. Good morning, Jacob. How are you? Does look like there is maybe a liquidity hole in here. Well, it might be doing that just because of short covering. I think that you got to think there's lots of shorts out here in this market today, right? But I'm not sure I see the fundamental case for interest rates lower here. I mean, 2.885 isn't terrible or anything. It's just, we got a Fed speaker in 30 minutes. I highly doubt that he is going to be dovish. We've got a We got FOMC minutes, and of course we have no clue what's in the FOMC minutes, but based on the way that the Fed has been talking lately, I'm betting that those are also likely to be hawkish. So I see a reason for the treasuries to be selling here, but that's not the way the market's going at the moment. And I think between me, I maybe I could justify another one if it really turns, but I think with the way this is going, probably I should stay out, right? There's so much stuff on Twitter this morning about Liz Cheney. That one is so... This is just like the perfect example of where the media's priorities are not really in line with the American public's. Because I don't think that anybody really gives a darn about Liz Cheney. I mean, I think that's why she lost so hard, is because she thinks that she's important stuff. And really, they were like, nah, you might vote with us, but you don't seem to reflect what our party wants at all. But the media because the media is playing this game like, the only reason she lost was because Donald Trump. And if it wasn't for Donald Trump, she would be like the leader of the Republican Party or something like that. And I think it's going to her head, because then she's like comparing herself to Lincoln, and it sounds like she's going to run for president. Do you think Liz Cheney is going to run for president? Should we have a poll on this? I think she will. Let's see here. I think the real year-end rate could be 3.75. Really? If Fed minutes state anything of an increase of balance sheet runoff, it could be equal to an equivalent. So why would... I don't think that you would ever get that in the Fed minutes, though, right? I don't recall a time where we found something important about the balance sheet runoff in the meeting minutes. But what is going to happen is you're going to get a little bit more color about, I bet you this is what the story is going to be. The story for the FOMC minutes is going to be that they're noting that in the 70s, the mistake that they made was that they backed off of interest rates too quickly, and then inflation came roaring back for a second run, and so they're trying to avoid that. That's what I think they're going to say. Now, the UK numbers were quite hot. So the market is pricing in a higher chance of a 75 basis point hike in September. That takes us back to 3%. And then if November is we were expecting November to be a 25 basis point hike. So that would put us at 3.25. But if they did a 50 basis point hike in November and a 25 basis point hike in December, then that would get you to 3.75, right? But what are the chances of that happening? Let's come and look. Are there many other people predicting what Jacob is predicting? Let's see. See me FedWatch, because we only looked at the most recent one, right? We only looked at September. When we get to December, so how many people think 3.75? 28.4%. They're not too far off, Jacob. I mean, the most popular is 3.5. If it's going to be 3.5, wait, well, come back. Let's do the compare again. Let's see, has that changed recently? Well, not too much. Hasn't changed too much recently. Man, these interest rates have a lot higher to go if that's really what ends up happening, right? Kind of makes me think about what Akshay was saying yesterday. I think that Akshay I think that it was just kind of a nonchalant comment to him, but I think he might have given us like a really huge insight that the majority of the market is missing here. That there is some real distortions going on in probably both the 2-year and the 10-year ends of the curve, keeping interest rates much lower than they probably actually should be. I wonder if that means that the Federal Reserve ends up having to be a little bit more forceful. Well, that is including the balance sheet runoff being equivalent to 25 basis points. I think we need to do some investigation on that. So I was talking, man, there's this guy on Twitter. He's a really good trader. Well, he's a really knowledgeable commodities trader. And I was asking him, like, what are factors that, you know, influence the basis? And he's like, well, that's for the trader to analyze both the future and the commodity itself really carefully. I'm like, okay, that doesn't help. Doesn't help, bro. Clearly I know that, but clearly I don't know how to analyze the commodity and the thing thoroughly, right? There's 119 even. Man. So again, my fundamental, everything, well, not from fundamental, but the things that I'm seeing make me think that the market should be selling off or continuing to sell off. What we're seeing is not that. Maybe it's because there's something more significant about those numbers than we thought. Maybe it's because they are hedging for the S&P 500 taking a dive here. Maybe it's just a rebalancing after a relatively aggressive overnight downturn in the treasuries. But today's not my day. I only took one bad trade off of it. I think that I'm going to keep it that way. If it really turns back down, then maybe. But there was a meta order up here with this, right? When I was seeing the iceberg, I thought, well, that's not enough for me to say that there's like a large meta order, but there is somebody iceberging at least up to here, up to the highs. But then after that, it really ran and they started to get forceful, and that says, yes, there is a large buy meta order in here. We don't know why. It maybe we're trying to look for a fundamental reason here for something when it's just random that somebody needed to buy here today. I don't know. But to Jacob's point about the balance sheet runoff, here's what I would say about the balance sheet runoff. The balance sheet runoff, remember, is like they just don't buy as many treasuries. And so that primarily happens around the auctions from what I've seen. So if you are going to see, you know, another 25 basis points of rate increase, I think that you're likely to see those ones more around the auctions. And the thing is that the last auction, there was more than enough demand. Like, this is the thing that's kind of a little scary to me about the current financial conditions. The Federal Reserve wants conditions to be tighter, and right now financial conditions are actually easier than they were a few months ago, and not because of the Fed, right? The market's situation is as such that conditions have been easier. So that kind of suggests to me that if we are if we're destined for some more inflation and the Federal Reserve needs to continue to act, they're going to have to act more forcefully in order to actually tighten monetary conditions, right? Which I think bolsters the idea of 3.5 to 4%, like some of the Fed presidents have been saying. Thinking of buying a mini SPX put. That would have made a lot of sense at 4,300. So there's this analyst that came out yesterday and said, you know, that 43 something such and such was like where you turn, and like market went right to that point, and then he put that note out and they flipped around, and kind of looks like he might have been a factor in that. Yeah. So I think that a put makes sense. Maybe just might be a little bit late. I guess it's probably not too late, because if it really does go, it's probably going to continue going all week. If they really turn, if the S&P 500 like really forcefully turns down, they're going to do it all week. At the moment, though, I kind of feel like that the overnight downturn was pretty excessive. Like, the more likely scenario in the S&P 500 is an attempt to push back up on the open, right? So this track ain't too bad. Jeez, woman found dead in Taylorsville after possible shooting. Whoa, this is a big old order at 30. I'm suspicious of that one, though. The placement of that order is a little bit suspicious, and I'll tell you why. Number one, we've already kind of come off a little bit. If I was to be trying to acquire more, this would be the perfect spot to try and create some selling to get my fills. So if we see a decent amount of volume trade here, I think that would bolster the idea that it's a spoof. Well, second of all, it pulled off. So there's that. But the other thing is kind of the timing is this is kind of like where you would maybe start to see another leg, or often you start to see legs around 715. In this case, it's probably not the case because it took a really long time for that buy to come through. So it will probably take longer for the book to recover. We're at VWAP. Well, I have VWAP down at 25. Kind of, it depends on if you're using the overnight session VWAP, then maybe we are. But I think that you kind of have to discard everything that happened before 6:30 with the news and everything. I will note that on my market maker positioning that the prices that we got up to were a rebalancing for the market maker's books. Like they got to the seller's cost basis and that's where they turned. I think I missed something there because before that large order showed up, there was a pretty forceful sell. That spoof may have just come from, after that sell, but like, look, the amount of volume on it wasn't really that high. So I don't know, guys. That really makes me feel like trying for the short again, but everything else I got here going says not to. Well, but how far would it have to go? For what price would the S&P 500 have to get below for that option to be in the money? It's an October expiration, so that helps. Pantheon Macro tweets, if you're looking for a recession, you won't find it here, quoting Ian Shepherdson on the U.S. retail sales. Core retail sales the last 3 months here. 8.6% annualized. Core CPI goods, same basis, 7%. Not a boom, but not a recession either. Yeah, well... What's going on with Andrew Tate is that he found a strategy that just perfectly exploited the TikTok algorithm is really what's going on. So here's the ugly truth with that one. Okay, you're right. I've been thinking about this a lot the past day. So I'm gonna morph this into an idea that I've been having, because one of the things that I hear a lot about when I'm watching YouTube videos about content creation is the tendency for content creators to burn out, and especially if you're a small content creator. And the thing that I think that nobody ever prepared me for, because I knew that like a lot of people burn out on it, and that it's a little bit, feels a little bit of a grind. Like you're constantly making content, and sometimes you don't feel like you're getting your dues for it, you know. The thing that nobody prepared me for is that you can go from feeling burnt out to having complete energy and then right back down again from one day to the next. Yesterday I was feeling a little burnt out. Well, this week I'm feeling a little burnt out because my video that I put out about the trading around the Federal Reserve, it did not do well at all. I'm really quite surprised that it is like one of my worst performing videos ever. Well, we're up to 77 views now, but if I just come here to my analytics, right? Like, look at the views. It's tracking significantly lower than everything else. And some of these videos here were kind of like, yeah, you know, I needed to do them for things, and I didn't necessarily expect them to do super great. Like, of course I did my best, but some of them are kind of like, well, you're gonna get traffic and stuff like that. Oh, if I come in here to reach and I look for like search terms, there's not enough data to even show me search terms. The only videos that were suggested from it were my own videos. Sharp and Goose says that you didn't even see it on your feed. Yeah, I don't get it. It just, the impression click-through rate on this. So I want the impression click-through rate to be 5%, and it's like 2.8. So like, I think it has to do with the Federal Reserve. Like, I think that they don't want the people go, oh, well, I don't really care so much about that. I'm more interested in the stocks. I don't know. Use a VPN and upload the video. I don't know. There must be reasons why this video is underperforming. Okay. I don't want to say that like it's random, but on TikTok, a lot of the time it is random. Like, you have seen all these instances where it's like somebody, they'll post a video, it doesn't do very well, and then they repost it and it gets tens of thousands of views. Like, I see that on TikTok all the time. It's extremely common, right? And so here, you know, it's already kind of a topsy-turvy ride emotionally, and then the algorithms kind of all mess with you. It was just like what I was saying yesterday with trading. Like the best thing you can do for your trading psychology is to have an actual edge. And when I say to have an actual edge, I'm not talking about some sort of, you know, entry condition that is profitable on a historical basis. I mean, you have a piece of information that will actively cause people to buy or sell that commodity, and that you know about it before most people, you know? Something that will actually predict the order flow, right? If you have that and you have a really good idea of what's going to happen, then the game is completely different, right? You don't have to give it that much room, because you should be able to see the order flow coming through. And if it doesn't come through the way that you want it to see, then you can just bail. So it really does allow you to have a situation where maybe you win 50% of the time, but the times that you win end up being a lot bigger, right? You can really break the expectancy that way. And then you're not questioning yourself or anything like that. You're questioning the market. You're looking for something specific, and if you don't get it, then you just say you're wrong and you're done. And you don't have to worry, like, all this stuff, man. All this stuff from like most psychology trading kind of content that I see out there is like, you're self-sabotaging and everything. Well, like, maybe I mean, I kind of find it hard to believe that it's all of these people. The reason why everybody fails at trading is because they self-sabotage. So I don't think that's it. I think that you're trading something random. You don't have any edge. You're liable to lose money anyways. And when you're in that kind of situation, you're going to lose it. Humans do not do well with random reward, right? So back to Andrew Tate. So what happened here was Andrew Tate picked up on the fact that it will boost content just for the sake of like giving you a reason to upload stuff, right? Like TikTok, every TikTok will have at least one video that does well. It just will select a certain video to say, okay, today is your lucky day, because otherwise people wouldn't make content, right? And it really is kind of a bum deal, because if you build an audience and you do well for a period, you get a bunch of subscribers, you don't really actually get to keep that audience. Like, you'll be subscribed, but you won't see those people, your subscriptions content in your feed. It's really sucks, is that you can't build a permanent audience. YouTube is better with this, but even with YouTube, you don't build a permanent audience, right? So Andrew Tate found a hack. Have everybody else put the videos up for you. If everybody else is just reposting your content, then some of them go viral. And then especially if you have videos that do draw people in because it's controversial or whatever the deal is, right? It was an interesting thing. And the thing that's funny about it is that people didn't really pick up on it. Like, at first, I don't think that everybody realized that it was really like a whole course designed to teach people to repost his content and try and make money off of it through like a pyramid scheme of sorts that they've got going on there, where you get referrals for people buying into the university, right? But then I don't think that people have picked up on the fact that, you know, a lot of it is a lot of different accounts pushing his content, pushes him up in the TikTok algorithm, right? And the problem with that is that the social media companies are going to need to change this. Like TikTok, of course, isn't going to be listening here, but if they were listening to us, TikTok, you got to fix this problem, or you're going to go the way of Instagram, right? If content creators cannot create a consistent audience and are not making money from the platform, then they will stop making good content for your platform. And as soon as somewhere else shows up where they get paid for their effort, they're going to go over there, and then everybody's going to start watching that other place because it will have better content. It'll have better overall quality. But so people haven't picked up on it. But I think that you're going to have to do something at some point, social media companies are, to make the content creator experience more consistent, right? Which probably means putting more emphasis on subscribers again. So that's what I think about Andrew Tate. I guess I have other thoughts about Andrew Tate, but I don't really. Yeah, I'll figure that stuff out on your own. Well, I will say one thing, and this really isn't related to him at all, but it's the issue, because the whole thing is they're like, oh, well, he's picking up disaffected young men, yada, 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 right? Guys, the biggest problem we have in our society today is that people don't have a sense of purpose. Used to be that your purpose was to have children and build society to make your children's life better than your own. For me, that's still what it is. And religious, it was religion that really pushed people towards that end. But sometime along the road, people kind of changed things. They said, well, not everybody has to have kids because we think that there's going to be overpopulation. And, you can find fulfillment in life outside of having children, essentially. But you can see all of these people, they're not finding that, right? They're not finding a purpose in life, and they don't really know what to do with themselves. And it leads to all of these nihilistic people out there. And then you add all of the other social changes that are going on, because the social changes have not been very positive for young men. More and more men are just giving up on dating altogether. And it's particularly hard for the young men to get any attention at all, right? So you add all that on top of it. It's not a good situation. Listen, if you get the young men, the only thing we got going for us right now is that they're employed, okay? Because if there was like a large spike in unemployment and we went to like 10% and above unemployment levels again, and you had all these young men unemployed, there would be a revolution. Like, statistically speaking, you get young men that disaffected, they're likely to start a revolution. So, always an interesting, especially if it's markets. If it's psychology, then we'll skim over it. Change the title to "How Money on NFTs and Crypto for Easy Views." Yeah. Right, Paul? That's the thing that I don't understand about that video, is that my best theory as to why that video is not doing well is because everybody looks at that as, oh, you're going to try and trade the Federal Reserve, and they scoff at that. When it should be that there should be more interest in that topic, because what the Federal Reserve has been doing and the trades around that have been really significant part of the market lately. I mean, that's why I made the video, was because you guys were asking me in chat these questions, and I was like, they shouldn't have to ask me these questions. I feel like I should have already taught them these things, but then the reality is I don't actually have any videos on this stuff. I think there's still more work to be done, because from the impression that I'm getting from talking to people, is that we still don't understand, okay, when this number comes out, that means that the Federal Reserve is more likely to raise rates or less likely. How do I sort that out on my own? And of course, that's part of trading. But obviously, we have to understand the forces that move interest rates first. So we need to make that third video. Although there might be some videos in between that first. Okay, here's the paper. Let me do it this way. Open in new tab. SSSRN, so it's probably, okay, the minimum maturity rules, the cost of, ooh, yes. Okay, so why is this paper interesting? We show that the performance of a traditional fixed income index fund is being negatively impacted by minimum maturity rules established by the indexes that these funds seek to replicate. Bonds removed from the index because of minimum maturity rules underperform a matched sample in the 2-month period surrounding their removal. A portfolio consisting of the fixed income fund and bonds previously removed from the fund by operation of the minimum maturity rule outperforms the fund itself on a risk-adjusted basis. We demonstrate that the relaxation of the minimum maturity index rule could result in improved performance for a highly popular... Well, no. You dimwits. Don't... Thank you for this paper. This is a good paper. But that last bit right there kind of suggests to me that the people doing this study don't understand a few core things. Because probably the reason that they outperform is because the indexes dump them. If the indexes are allowed to keep onto them, then they might do this well. Okay, so... Okay, Bowman is speaking. And I am hearing that he does not comment on policy in his prepared remarks. Oh, by the way, sorry, she, Bowman is a girl, right? Due to speak about technology innovation in financial services at the Vencent FinTech Conference in Arkansas. Okay, so from this, oh, where did it freaking go? Oh, here it is, all the way over here. Minimum maturity rules. So fund selling causes the prices to depress. I'm trying to sort out though what the, so how does this work in my head here? I'm a fund and I buy 10-year treasuries, and my index is only supposed to do a 10-year. So I could have one that is maybe like the on the run, and like maybe, you know, there's another one and another one and another one, and then beyond this point I'm not allowed to hold it anymore, so then I have to sell. So they're saying that if I come in and I buy the one that's like the 10-year that's just beyond the cutoff period for the index or the future or whatever it is, that I can buy into that and then it'll come back up. Although the question is, how long do they have to hold it to realize that? Well, so that doesn't sound like anything that we would be able to take advantage of with the future. So what is it? Another hilarious part is that was literally the whole LTCM strategy just on steroids. Oh, isn't that the one that fund that like got blown up basically? Yeah, long-term capital management. Right, because they over leveraged and they relied on, they misunderstood the fat-tailed nature of it. Because like in the long run, it's like a basis trade, really, right? I'd really like to understand more about basis trading. It's just that everything that I've seen about basis trading suggests that I would need a much bigger wad of cash to trade it, right? But the thing with basis trading is like 99 times out of 100, by the time the expiration comes, the basis has become zero, right? It's just that one time when something crazy happens right at the expiration that doesn't happen. They were levered on Russian dollar bonds 30x. Really? Oh, but I guess what you're saying is that like, so what you're really saying, Akshay, is that we should start a fund, right? We should start a fund, except for our fund, we'll focus only on that one thing and not get overly levered, because they actually had a really good market inefficiency involved there. I really like it. I really like the idea a lot. In fact, I need $1 million. No, I don't even need $1 million. Well, to run a fund like that. So if it was futures, I could get my CTA, could do the Series 3, and I could run a CTA, right? But that wouldn't help me for purchasing of actual bonds. I'm not quite sure what licenses we would need to run a fund like this. That's right. When Russia defaulted and run up to Asian crisis in 97, these guys went belly up. So we can say we're only going to do your US and ECB bonds. Yeah. Or ECB member state bonds, rather. even then you would still be tempted to like, buy the ones that are like the periphery countries and stuff. It still would create a tail. And Wall Street ran an editorial with the glorious title "When Genius Failed," followed by the book by Lowenstein. Well, so tell me your opinion on this, though, actually, because the general consensus on this is that they did not properly understand the fat-tailed nature of markets and ergo took bets that crashed their funds. But it kind of sounds to me like that you're saying that the fundamental strategy was good and that the real reason they blew up was because they started doing things outside of their fundamental strategy. They were taking on risks that they, like dumb risks that they shouldn't have. This is something that I see a lot, though, is like for instance with Celsius. I'm seeing all these people from the crypto world now saying like, oh no, Celsius totally would have worked. It's just that the guy in charge of Celsius started taking control and placing bad trades and was directing them to get into all these risky trades and that's why it blew up. Not that the fundamental idea was the reality is that the fundamental idea was bad. And I do think that LTCM did have a problem and that the strategy that we're talking about does have a fat tail, right? Which means that we would want to be very, very cautious about how we executed a strategy like that, right? Because even if the strategy has edge in the long run, in an environment like this where bonds are just getting absolutely creamed, you're still going to lose money, right? So you're going to need to keep your leverage low enough that you can handle that kind of a decline is not more than a 20% decline for you. Strategy was very, very good, but they had promised so much to so many people to raise money. Yeah. See, here's the other problem, Akshay, is that if we start a fund, first of all, I don't know what certifications I would need to run a fund. But number two is I'm not a fundraiser. How would I fund? We need the connections, I need rich buddies. Hey, listen, if you're rich, you want to be friends, because I need more rich friends so that I can raise funds for my hedge fund. All right, like everything, it goes in cycles. When they became too big for the market to absorb, a combination of amount under management and leverage, they started going into different things to keep up the returns. And that caused the cascade, them selling parts of the fund to meet margin, caused that sell-off in the paper as well, tanking them whole. Here's the thing that I just don't understand, guys, is like, there's all of these things that I seem to understand about the market that like even the top fund managers don't know. How is that the case? Like, this happens all the time. You're selling, sells into the market and it pushes it down worse. But like, you're always should have to factor in your impact into the strategy, right? Renaissance has been very disciplined about that. Yeah. And I think that we would do the same thing if we did that, right? As we'd say, okay, this is the only strategy. They have kept Medallion at around 10 billion and it pays out everything over it. Yeah. I think that we would, we'd have like this one strategy and we'd say, okay, this fund is capped at X amount of funds. And then if we make more than that, it gets distributed to your whatever, whatever it is that Renaissance does. And then, we could start other funds. We could find other strategies that are profitable, but those would be different funds. right? Because that strategy, I think that the whole nice thing about a strategy like that is that it should be very consistent, right? It should be very low risk and consistent. Now that does mean that you'll get fat tails, but we should be able to manage the risk of the fat tail too. Well, isn't that what everybody says, and then they can't do it? Well, I'm gonna blow my nose here. The largest risk is time. Okay, so yeah, that was the other question that I had, but I was like, I wasn't going to ask it because, you know, I just need to read the full thing. Actually, let me make sure that I download this paper. And I put it in my list of bond papers. How long do they have to hold it in order to realize the gains? Is it that you buy it after it goes out of the index and you hold it to the expiration? Take the 30-year OTR. Say it rolls down to 29 and it still hasn't converged. You are holding it at a negative mark to market. You can trade the futures UB around it, but UB gives you 100k exposure. Cash bonds are 5 million a clip. All right. So that just means that you have to trade 50 of them, right? Your investors will get your rear. And you run into the same problem. I think the thing that it seems like we're kind of working up to it, it's just that I'm not sophisticated enough to figure it out, is like that we should be able to determine like at the roll how like a certain amount of volume that will go through based on people hedging and or closing out and rolling their trades, right? And one of those flows that I should expect to see is people taking trades from the basis, right? The safest bet that you can take is hold it for 5 years because it will converge to the ZB basket at that point. That's by design. But will your investors wait for 5 years to break even? I gotcha. Like you're saying that like in the end you might get an X% return per year, but you'll get 1 year where you get a really big loss, and then you can't expect your investors to keep all of their money in it. So then you have to sell. See what you're saying? In other words, a fund based purely on that strategy would probably not be a good idea. Unless you forced a holding period. We'd have to say, okay, if you invest in this fund, you can't take your money out for 5 years. Right? Safest idea is put up a large amount of proprietary funds or lock a long end period. Oh, yeah, I guess when you say proprietary funds, you mean like don't turn it into a fund, just trade it your own money. Because if it's your own money, then you can say, I know what's supposed to happen and I'm going to weather the storm. You know, so if only I had $5 million. Well, but you're thinking about it because you read that and you're like, well, I could do that, except for that I'm already doing really well with Euro dollars, so I'm not going to mess with it. So I'll give it to Seth. Don't have a $5 million. Okay, so here's what we got to do then, guys, is make the YouTube channel blow up. So, you know, everybody go and visit that Trading the Federal Reserve video and leave a comment. And go and tell that dipshit in the comments that he's being stupid. And then the channel will do so well, we'll make $5 million in a year, and then we can use that to start our fund. and it will be a family fund that will trade bonds. Sure. Oh man, the thing that I find so interesting about this kind of research and strategy is that, like, there are inefficiencies everywhere. There really are inefficiencies everywhere. It's just that the one thing that we can do is teeny tiny traders with a small account, retail trader, and the limited knowledge and resources that we have. The one thing that we can do is the thing that's already like really efficient, right? Right? All of the things that it appears like there is like a real obvious opportunity or like a real proven opportunity are things that you need a lot of money to trade. And probably the reason why these inefficiencies exist is just like we were going through there is like, oh, okay, so you could start a fund based on it, but there's a lot of problems running a fund based on that, and hence the inefficiency remains. Because there's not anybody that's come out there and said, my mission in life is to remove this particular inefficiency from the markets, and that's what I'm going to put my money towards. Right? We just have to go with the market that we have, though. Well, I tell you what, pretty good trend up, quite unexpected in my view. I kind of said, hey, like, wouldn't be bad idea to go short, but really not. Well, I didn't say it was I wanted to go short, but I said probably I shouldn't, is what happened. And since that time, we've been talking about this. Well, it's only been about 15 minutes actually, but no, it's been more like 30 minutes because this kind of started around 7:15. But since that time, the treasuries have not really gone much of anywhere. They've come back. It looks like there's a liquidity hole here. Might be the case that at the top of the hour, we could have another leg, and can't say which direction it was. Now, if I wanted to go short, I would probably have wanted to do it already. So I'm not so sure that a short makes sense at the moment. Yeah, I saved that one. So I got a bunch of them. Like the ones that I found on the treasuries are like the barbell strategies and stuff like that. But there are always things that's like, oh, but I can't actually take advantage of it in the futures. Now, presumably there might be some opportunities for us in the futures. Like it seems like there could be some points at which, so like say for instance the treasuries are on a move up, your basis trade would be to sell the treasury and buy the bond, generally speaking, right? So if you could find some indicator of when the basis traders are more likely to pile on, that might lead to depressed prices in the treasuries in the downtrend and provide a good opportunity for a speculator to go long.
right? Like, that's the sort of thing that I think we're looking at. But it's just like, I'm having the hardest time figuring out a model for like, when is the best time to take a basis trade, right? And two, like, how much money on trading a specific type of strategy out there really is. You know, like, I look at these models that Nomura has. It's like, how do you guys determine how much CTA money is out there? I mean, it's constantly changing and stuff like that. So how do you actually get an accurate enough estimate? Doesn't make sense to me. Still missing some points. I think we've got the speculator thing, at least the basics of the speculator thing, down pretty good, though. I think. I think here right now, like, if I was willing to take on a lot of risk, I think that I could go short the treasuries right now and eventually make money. It's just, I might have to hold it past the FOMC minutes and into the close to really make money, and who knows how far against us it would go in the meantime. Serbia and Kosovo must dial down Balkan tensions. Rob Reiner. With the singing of the Inflation Reduction Act, I'll say it again, President Biden has accomplished more in his first 2 years than any president. What a load of shit. That's not even close to a fact. All they did was give rich people a bunch of money. That's really interesting to me that some liberals think that the Inflation Reduction Act is that significant. If you want to take outside money for CTA fund, you have to register with the CFTC and become an NFA member with periodic disclosures. Yeah, I understand that. I don't know how serious I am about starting a CTA fund. I'm kind of in the mode of like, well, let's just kind of start down the path and see what happens. You know what I mean? But I still have to finish taking the Series 65 exam. I've been working a little bit harder on it, so I'm getting closer to getting through all of my study materials. I kind of changed my organization method because I found that I would just not look. Like, if it's not within my vision, I don't think about it. I forget about it. So I went and I got like a clipboard. See, it's like a clipboard with one of these little clips up here at the top. But because it's a smooth plastic surface, it's really good for sticking sticky notes on, and then I can put a pad of paper over top of it if I want. So I put sticky notes on there, and then I write the stuff that I got on there. So like, I've got some things that I'm supposed to be doing every day. Oh, you know, something I need to add on there is the Twitter. I need to make a Twitter every day. I'm okay for now, but things are starting to get to the point where I could justify hiring a person just as a personal assistant for me. Because I spend a lot. There's actually a lot of time trying to keep up on everything that I do for trying to build connections and talk to people for the channel. Anyways, so I got my Series 65 on that list of things I'm doing every day.
Another thing that I've been doing every day, you want to see something while we're just kind of yapping? This is a little bit of a drop there, by the way. They're down to the lower end of the range, so maybe the short is still a good idea. But I've been trying to get into Vim. I mean, I always kind of knew how to use Vim, but now I'm like, I want to be like the master at Vim. Not the master, but you know, I want to get pretty darn good at it. Just because I really like it when I'm in the flow and like the keystrokes just come, you know? So the thing that I'm dealing with right now, here's I got a little game, is you use HJKL to like move around. And that's actually like really hard to do. So I've been practicing this every day. Let's see here. I forget how this one's supposed to go. Let's go. Oh yeah, okay. So I gotta move this one down, and then move this one. Oh, actually, I might not even need to do that. No, I'll do it this way. And so I play this for like 30 minutes to try and get better at using the arrow keys to navigate in Vim. And I spent all this time like getting Visual Studio Code set up correctly. So when I am coding and I'm coding on the spreads and stuff, it's quite nice. Quite nice. And I have had a little bit of time to do it because at work, I've been doing some things where it's like these builds that take forever. Not too much time though, unfortunately. Still, I hopefully by the end of this week I'll have that one done. The spread done, at least. I'll put out another version for you guys. Yahoo Finance Bed Bath & Beyond stock is up more than 300% in August. You know, probably, you were talking earlier, let's talk about the S&P 500 for a little bit, right? Now's a good time to talk about that. The S&P 500 had a little bit of a change in sentiment yesterday. Towards the end of the day, it was just like all of a sudden everybody decided like this is unsustainable. I think that a lot of that sentiment comes from GameStop and all of these others like blowing up again, right? And that's why people are saying like, oh, it's crazy, it's unsustainable, etc., right? Well, the counter case to that, the counter argument to that, I think is this. GameStop, Bed Bath & Beyond, and these kind of retail mania stocks will probably eventually come back to the prices that they were. Those that might not necessarily have a huge impact on the rest of the market. The thing that's going to have a huge impact on the rest of the market is what the future orders are going to be. And I've been telling you guys all month, haven't I? I've been telling you all month that it looks like there's a lot of flow to come in and buy. Now, after the options expiration and definitely after the end of the month, I'm not sure how strong that flow is anymore. It's not that I think that it's going to be less or that I suspect that it's going to be less. It's that I just don't have any information whatsoever on what those numbers are going to be then, right? I need another update from the flow traders at Goldman Sachs. But let's not just assume with everybody else that means the S&P 500 is going to see a continued downturn here, right? What's going to move the markets are the orders. Now, there is still a cap on this market at some point, and maybe it is 4,300 because the market can only do so well before it starts to force the Federal Reserve to get even more aggressive about interest rate increases, right? So there is a theoretical cap on that upside. Okay, sorry, we got some news coming up here. U.S. business inventories month over month expected 1.4. Actual 1.4. So, well, Oh, you know what? I didn't realize today was 20-year bond auction. That will be interesting because there's been a lot of demand in there and things have kind of changed. So we'll see if it's as crazy as it was last time. But we also get the gasoline inventory, so that should be interesting as well. Treasuries are kind of on a downtrend. It's kind of just like a gentle slope down. It doesn't look like there's too much interest in it. Now that we're here at the top, past the top of the hour, maybe we will see a driver, and it could be short, but the moment, like, we saw a little bit of a sell and it was like really, really tiny. So I'm a little bit, the conditions right now and the activity that we're saying, I don't think are supportive of another strong trend trade, but it is still possible because with the FOMC meeting minutes today, there's gonna be people that are gonna want to trade that, right? Or to take a position ahead of that. I think that there's got to be some people that want to sell the treasuries to position themselves for the FOMC meeting minutes. Of course, if the FOMC meeting minutes end up being dovish for treasuries, then I will feel stupid, but I'm pretty sure that it's going to be a hawkish event. I feel pretty confident. I feel confident enough to put my ego on the line for that one. All right. Isn't that the thing? So I was watching a documentary about Michael Schumacher. You know what? That documentary kind of blindsided me because, like, I read about him and everything. My wife was like, oh, so wait, what happened to him? Because it seemed like they were all sad at the end. And I was like, no, I think he just retired and he was fine, right? And I went and I read his page and it just said, yep. And then he retired and everybody lived happily ever. So I thought, oh yeah, Michael Schumacher. He's still walking around somewhere teaching people how to drive go-karts somewhere, or, you know, having fun with his family. Nope, he had a skiing accident and severe brain damage, paralyzed basically. In a wheelchair, has difficulty remembering things and speaking. Kind of sucks. It's actually like really, really, really sad. And so he doesn't have much of a public life anymore because of that. And so I was kind of blindsided by that, but that wasn't the point of all of that. One of the things that they talked about in there was that his mentality was like, you only get what you put into it. So 100% commitment to it, which I think is a good way to approach trading. But then the other side of it was that he never thought he was wrong. It took a lot to convince him that he had done, like, if there was a crash, that it was his fault. That, like, you know, the mentality that he had to have was one of complete confidence and I know everything and I'm always right. And in almost any venture, this kind of just push through it no matter what and always believe in yourself sort of mentality helps. I think that is the case, except for in futures. I think that in futures, the thing that helps you the most is understanding your limitations. Right? Any other in almost any other kind of venture, a certain amount of narcissism is useful. Narcissists have a certain degree of success for a reason, because that trait can be useful to you, right? But in trading, narcissism is deadly. You'll do well in the short term, but in the long run, you'll blow up if you're narcissistic. And I see a lot of that in the market right now. It's people that they think they're all that. They start a course and whatever. The reality is they don't know squat. There's still a lot on Twitter this morning about Liz Cheney. So I'm not interested in it. Actually, you never finished your sentence. Nomura is probably getting data from there. Okay. Oh, from there. Oh, wait. You meant THERE, not THEIR. So you're saying that they're probably looking at the NFA registries and how much money under management they have, and maybe they're getting the information from there. But wouldn't you have to go through like every fund and see what their stated strategy is? Maybe that's what they're doing. Ugh. It's just not something I can do. Here again, if the YouTube channel, blows up and we're making millions of dollars a year, and then we'll hire somebody to do that for us. Hire somebody to go through every fund and see what they're doing and make a model based on what they're likely to do. Oh man, Bloomberg, would you live in an RV to afford college? Here's how inflation hit students are making ends meet. You know what? If I was a student, I guess I wouldn't mind living in an RV. It's just I would not like living in an RV park. But if I had my own property somewhere, yeah, Nomura employs like what, 20,000 people. I'm sure they have someone in the basement to do exactly that. Yeah, that would be a tough job. Grindy job. I've been looking, and my wife, she's a flight attendant, and there are periods at where she's like, I really don't want to go back to being a flight attendant. I want to do something else. Like, what do I have to do something else? And then I start going into all of the things that I could help her do at the very least, and that I think that she would be good at. So the thing with her is that she's, I've seen her do a lot of tasks that I think are tedious. So like one of the things that they really enjoy doing are like these jewel posters. So like you'll get this poster and it's got a little grid with numbers on each spot on the grid. And then you put these little jewels on, based on the number on it. And then it makes a picture, right? So you basically make pixel art. And, it's like thousands. It's like thousands of these little beads, right? And they love doing it. That's so tedious. I don't understand why. I don't get it. But those, the things that she always tend to be of that nature. That and reading Facebook. She likes to read Facebook. So I think that because of that nature about her, and I think that she's kind of a little bit more serotonin driven. Like you got some tasks that you just do over and over and it's kind of comforting sort of a thing. So I think that she could be really good at video editing, but I don't know. She doesn't really seem interested. She can't get herself to be interested in it. I think the issue is just she needs to learn to make herself be interested in something, right? To say, well, I'm interested in this because it'd be beneficial to me and whatever. Like, because I could be interested in this or that. Like, why does it matter? Or why is it that I choose to be interested in this and not in this? It's a conscious decision that I can make. And so if I know that this thing is going to make money, then I can choose to be interested in this because it makes money, right? But video editing, editing a video is a little bit tedious. I don't know if I would enjoy doing that every day. But I tell you what, if you got the skills, you make a lot of money, and she probably could make a lot of money doing that. She would probably be really good at it. Plus, she's a woman. She's got, good color vision, so she can do the color grading good. Because it's like that or learn Python. And listen, if Seth is going to teach you how to use to program in Python, you're going to be a real geek. I don't know if you want to become a real geek. I'm gonna teach you Vim, and we're gonna be doing the machine learning algorithms. Yeah. Actually, I think I would teach her JavaScript. But I digress. Apple buys supersonic jets? What? Okay. Looks like the treasury kind of balanced back out. Let's reset things so we can kind of keep track of it a little bit better here. I do see oil is on the higher end of its range now, but I'd say it's still pretty messy over there. Man, I don't know how you guys trade that thing. Bitcoin. There were points where I thought I had a good strategy there, but it just moves too much. Bitcoin is looking under pressure here this morning, but after the 8 o'clock news, and I don't know why this would be the case, but after the 8 o'clock news, we did see a pretty decent decline of about 30 cents or so in the dollar. But the rest of the markets here look pretty quiet today. Aside from that little bit of excitement off of course, the retail sales number and the treasuries coming up here for I'm still not sure why. Other than that, the order flow has been about what I expected. It's just a quiet day. Oh yeah, we never read this story about lawns. See, this is one of those. I really hate when I go to I mean, I shouldn't hate this, but when you go to read a news story and it's, of course, it's informational content in it, but it's also been written to be entertaining reading or something like that. It's like, why am I going to read a 20-page story like that? Just give me the info, man. No. I don't have that patience. So yeah, I'm not going to read that one. Oh, look, Joe's Inflation Reduction Act secretly brought to you by Bill Gates? What? Oh, Liz Cheney vows to do whatever it takes to stop Trump. She really hates that guy. It's really weird how much some people get triggered by it. Where are rates headed? Is the Fed correct or the euro dollar curve? Target slumps amid growing inventory glut as consumer spending continues to shrink. That doesn't sound good. OPEC ahead warns of oil squeeze. Yeah, we heard that earlier. I guess since they said that, we are higher, right? But it didn't really move too much off of that one. Let's read this one about interest rates. The euro dollar curve implies 4 quarter-point cuts are on the way starting in 2023. The Fed believes otherwise. Let's discuss stock market implications. This is from Sheldoc via mishtalk.com. I don't know what that is, but we'll read it. The euro dollar curve has nothing to do with euro or dollars. Rather, it is an interest rate curve and one of the world's most widely traded futures. After peaking at about 3.9% this year, euro dollar bettors believe the Fed will then cut rates all the way down to 2.8%. Wall Street Journal contributor James McIntosh discussed the above chart in 5 not quite impossible things the market believes. 1, inflation is transitory. 2, the Fed realizes this in time. 3, the jobs market cools enough to slow wage rises. 4, but not so much it means falling household spending. 5, so consumer spending rises in real terms. In reference to the lead chart, McIntosh says the first assumption is the hardest to believe, that inflation is transitory. This person says, I disagree. The hardest thing to believe is the overall Goldilocks scenario and that the current rally makes any sense at all. Well, okay, you don't. So, like right away, it's like, well, you're saying fundamentals should trump all. Well, it doesn't. Orders are what moves the market. There's a reason why there are buy orders coming in. Inflation may easily come down if the Fed tightens too much too fast, causing a severe recession, but what would that do to corporate profits? But assume otherwise, that inflation does not come down more. What would that do to corporate profits? While any of the first 3 points may easily be correct, the combination of all 5 being correct and that stocks will rise in a Goldilocks scenario is what I find hard to believe. Well, that's okay, but this isn't. I'm not so sold on this article so far, to be honest with you guys. He's like, well, I can't believe it. Well, okay, then don't believe it. I will discount every signal on the euro-dollar curve until June 2023, when the euro-dollar futures are set to be converted to SOFR by the CME. I think that's a good point, actually. The market isn't forward-looking and never was. It is a coincident indicator of current sentiment, wildly wrong at major turns. If the market was forward-looking, what precisely was it looking forward to at the November 2007 peak with recession starting the next month? What was it looking forward to at the 1920? Okay, this is a terrible argument. I mean, yeah, the markets are not informationally efficient. They are forward-looking, or which is to say that the market tries to factor in all available information. It's very, very poor at doing so. I believe the euro-dollar curve is more likely. Well, but why? Okay, see, this is just I want to believe something, right? Okay. Well, let's read the whole thing that he says. When has the Fed gotten much of anything correct? The euro-dollar view has 2 ways to win. First is the Fed actually does tame inflation to the degree it wants. That's possible in a severe enough recession, and the global picture is easily weak enough for that to happen. The second way the euro-dollar might be correct is if the Fed breaks the credit market. The Fed would immediately reverse course regardless of inflation should that happen. No, that's not correct at all. This guy has no clue what he's fucking talking about. If the Fed, quote unquote, broke the credit market, and inflation was still going wildly out of control, they would continue to raise interest rates. I think they would take action to bail people out and stuff, but they're not going to let inflation get out of control. The least likely thing is that the Fed achieves the Goldilocks landing, yet assume that happens. McIntosh says, and I agree, the bull case that stocks and corporate bonds are pricing requires a combination of low joblessness and wage rises to allow spending to rise faster than inflation even after the pandemic savings run out, but not so much faster that it hits capacity constraints and accelerates inflation. Yeah, so I think that they're wrong about the euro-dollar and treasuries, but I think that they are right about the S&P 500, which is to say that what we're seeing in the S&P 500 seems to be incompatible with the points everywhere else in the market, and at some point something's going to have to give. If the analysis takes into account curve post that, then all the power to that guy. Yeah, no, they're not. So I do kind of wonder though, like, can they really be pricing in for? Yeah, I don't know. Can the changeover to SOFR really be creating, a change in the curve of a whole point? Am I still listening to Stream Beats here? I am. This is just a very different song. This song is a little bit too lovely compared to the thoughts that I'm putting out right now, right? I'm sitting here like, this guy is wrong. We're all arguing about the Fed. When has the Fed ever done anything right? And then meanwhile, it's just color filled in the background. It's very lovely. Oh man, it's been a long day. I didn't sleep well enough last night. That's why I'm feeling this way. Treasury's up another 4 ticks here. That's kind of funny, like, especially when I look at it on the chart. That's like, oh, that looks like a significant turn, but in reality it wasn't really that big. Could be SOFR are daily compounded and they are at a set premium of 0.216. Oh, okay. I don't completely know what that means, but that was enough to convince me that it could be the case. I guess my position on this is that I think that the CME FedWatch tool is the most effective metric of where markets think interest rates will be at certain set periods. Okay, Tobias, are there any surprises expected for the FOMC minutes? I think most of the stuff should be well known. So it's kind of hard, Tobias, because one, anything important that comes out of the FOMC meeting should be brought out in the statement and the press conference and comments from Federal Reserve members that happens in the 2 or 3 weeks in between, you know, when the minutes are released and stuff, right? But it just is the case so very often that there will be a piece of new information in the minutes that we didn't know about, and the market ends up reading a lot into it. So I think that it's very likely that when we get the FOMC minutes, that there's going to be something in it that riles the markets up. It's very likely, especially in this kind of situation. And they wouldn't even need something all that good to get them riled up about it, right? Is kind of the thing. Now, what would that be? I don't know. But given the way that the Federal Reserve has been talking in public and so forth, it's very, very doubtful, in my mind at least, that any piece of new information that we would learn from the FOMC minutes would be dovish. But you never know. The FedWatch tool uses ZQ, not ED of SR3, and the current front month contract on ZQ is January 23rd. But doesn't the FedWatch tool go further? No, you're right. The furthest that the FedWatch tool goes is January 3rd. I think you're right. I don't think it shows us beyond. Oh no, it says it goes February. Contract ZQ G3 expires 28th February 2023. But it's not pricing in any kind of a decrease. So I guess we need a few more months to go by before we can see it on there. But then if we start to get into mid 2023, then we should be able to see if there's a difference between the euro dollars and the SOFR dollars, and that explains the discrepancy or not. Yeah, I also have a feeling something will be there in the minutes and the market is going to react. Yeah. I mean, there's always, Tobias, there's always a story that comes out of the meeting minutes. There's never been a time when the meeting minutes come out and CNBC doesn't write a story about it, right? It's just a question of how big of a deal does the market think it is. And given this situation, they're probably likely to overreact to whatever comes out if it's hawkish, right? So the S&P 500 in particular could very easily overreact. Man, I tell you what, the trade in the S&P 500 lately has not been very good, right? This has been have I seen it this choppy? I think I can remember sometimes pre-pandemic where some days it just seemed like they went nowhere and it was really hard to trade. Yeah, but either way, so it's not a fun trade over in the S&P 500 lately, I don't think. And in the end, the 2-year didn't change all that much. So I was at 3.4. Yeah. Okay, let's read this other story on Zero Hedge. The Democrats' Inflation Reduction Act, which according to the Congressional Budget Office will raise taxes on the middle class to the tune of $20 billion, not to mention unleash an army of IRS agents on working class Americans over the next decade. Well, that's not... Supposedly, the IRS agents are only supposed to go after people that are making more than X $100,000 a year, but we'll see. Was made possible by Bill Gates and in smaller part by Larry Summers, who have been known to hang out together. The bill was signed yesterday. Okay, in a Tuesday Bloomberg article, I'll go read the Bloomberg article. Gates said he tapped into a relationship with Manchin that he'd been cultivating at least since 2019. He was bringing on more than just his trademark optimism about addressing climate change and other seemingly intractable problems that have been his focus since stepping down as Microsoft's chief executive 2 decades ago. As he revealed to Bloomberg Green, he has quietly lobbied Manchin and other senators, starting before President Joe Biden won the White House, in anticipation of a rare moment in which heavy federal spending might be secured for the clean energy transition. Those discussions gave him, yeah. So this is the thing that's just like a little bit maddening about the Inflation Reduction Act. Okay, it's not intended to reduce inflation. Or rather, that is not the driving principle behind why Democrats want it passed and think that it's a significant piece of legislation. Okay, they want money for green initiatives. That's what this is about. They want money for green initiatives, and they're just calling it the Inflation Reduction Act because they somehow found a way in their minds to claim that it reduces inflation. Right? Those discussions gave him reason to believe the senator from West Virginia could come through for the climate, and he was willing to continue pressing the case himself until the very end. The last month, people felt like, okay, we tried, we've done, we failed. Gates said, I believed it was a unique opportunity, so he tapped into a relationship with Manchin that he'd cultivated for at least 3 years. We were able to talk, even at a time when he felt people weren't listening. So here's the problem with this, is that they've already put a lot of money into green initiatives, and we've seen two things come out of it. One is that the money just gets wasted. Okay, like Solyndra, the money just all gone and it didn't accomplish anything. But number two is that it creates a market distortion that can create malinvestment. So for instance, energy prices have risen despite all of the green energy initiatives that we've been doing over the past 10 years, right? That doesn't help reduce inflation. Gates can help inflation by making Excel and Azure permanently free. Well, certainly not Azure, but Excel could get cheaper. Yeah, sure. Anyways, no, another thing that really bothers me is that, like, many of these green initiatives do not actually reduce carbon. Like, they're not doing the full analysis. Like, if you have a good working car and you sell that car to buy a new EV car, then you're not actually reducing carbon emissions, because an electric vehicle car costs a lot of carbon to make. And so it only reduces things when it's like a new car. It wasn't replacing an old car. Does that make sense? Because building a car in general just has a lot of carbon emissions. Anyways, so like, you shouldn't sell your current car to do it. You should wait until that car is done and then buy an electric vehicle, and then you're reducing carbon. Or like some of these, like the windmills, they take a lot of carbon, and then they don't know what they're going to do with them when they end their lifespan. And it doesn't sound to me like wind power is actually that good. They're not investing in nuclear, although maybe actually we should come in and look. What is the name of this company that does the small nuclear power reactors? Nucor? NuScale. NuScale. Which is, well, it's coming back down. SMR. As here's what I want to know. So if everything is happening in the name of being green, what about the green colorblind people? Well, what I want to know is if you're green-red colorblind, does it look like green or does it look like red? What did I say the ticker symbol was again? SMR. SMR. NuScale Power Corporation. I'm really mad that these guys debuted and I didn't know about it. Okay, well, they have come off of their most recent highs, and I think that the deal that came out, I don't think that was jumping on that deal, so I think that it was jumping more on that they got their approval, so I wonder how much more we could come back. You think that it could come back to 10? It's possible, especially if the larger market falls down, right? It just frustrates me that there's not more investment in nuclear power. I think that that's the place to go. I think that that's, you know. So again, the question is, if the markets were left to their own devices, where would they invest the money? Because when you come in and you're the government and you say, well, we can only invest it in X, Y, and Z, and then of course X, Y, and Z will go up, but it can be malinvestment. Like it might not be the right choice. And politicians have a lot of things influencing them, so they don't necessarily make the correct choice scientifically. And yeah, I'm worried about a lot of this money being wasted, but I'm also worried about, you know, some of these issues where it's like, we're more reliant on fossil fuels for our energy than we were a few years ago because they like let these nuclear power plants close down and stuff like that. Like, come on. Did that reduce inflation? It certainly didn't. Oh yeah, you're totally right, Tobias. At the moment, France has 56 power plants and only 20 are running because it's not too dry, it's too hot to cool them down. Because right, with a nuclear plant, you heat water up and the water spins a turbine in a big thing, and if it's too hot, then you can't get the steam to rise and you can't get this thing to cool down for the water to collect back down at the bottom, and so the system doesn't work. You're correct. But although I do believe there are other ways other than an evaporative cooling tower. We should research that. Let's see here. There you go, DW. Hot weather spells trouble for nuclear power plants in Europe. France is bending the rules in order to keep its desperately needed nuclear plants going. Environmentalists say that discharging hot water into already warming local rivers is a disaster in the making, and that instead the state should be pushing for more renewable energy. It's good for Germany, though. There's got to be a way around that. Well, let's not say that. I'm sure that the pro-nuclear people would have a. Oh, let's see. There's a subreddit that I love to read about this stuff. Reddit.com/r/nuclear. I think is what it is. Oh, what's this? Nuclear and the Inflation Reduction Act. The IRA has cleared Congress and now needs to be signed by the president. Provides good support for plants operating by January 1, 2024 with a 10-year subsidy of 3 cents per kilowatt hours or 50 cents per kilowatt hours, where workers are paid above the prevailing rate in the area. This could be enough to keep threatened plants like Diablo Canyon operating. There are similar subsidies for SMRs and advanced reactors operating after 2025. One thing I'm not sure about is whether new projects post-Vogtle for large reactors like the AP1000 would be eligible for subsidy. Possibly they've fallen through the cracks. I realize there are no current plans for such plants in the US, but a subsidy might make them more attractive. Otherwise, it looks good. SMRs, blah, blah, blah. Oh, that's interesting. TerraPower is the other one. TerraPower raises $750 million. I want to be in on that. Ah. Haven't seen any stories about it here so far. Penny's molten salt reactor cleared for startup. That's cool. I knew that, but I just want to point it out. Okay, here we go. As Britain gets drier, we don't talk about how much water nuclear power uses. Yeah, it's not like the UK is surrounded by an ocean or anything. Let's talk about the way a nuclear power plant could help desalinate loads of water and feed it into the water network. That's actually a really good point. Oh, dude, I didn't even think about that. So you make all these power plants in, well, I don't know how much water you'd actually get out of that, though. I can't think that it would be that much. Okay, let's see here. This seems to be quite an issue in France and America, where to my understanding their nuclear power stations are built along rivers, but for us with a lot of coast, this shouldn't be a problem. 4 reactors in France are on rivers and lack cooling towers. It's insanely overblown as an issue. I see, but this doesn't address the cooling. So that does not answer it. Let's come back up here. This month. Oh, they don't have the most controversial ones. Put up stationary bikes with dynamos in prisons and bring back hard labor as a punishment. I don't think that would generate very much electricity either. Let's see if I just search for heat wave. It's called a derogation, and it's nothing new. A lot of French reactors have been built without cooling towers, like at St. Alban or partially at Bougie. Strict environmental standards mean French reactors can't discharge too much water, partially open circuit ones. Then you have to account for the fact that the seasonal normal is increasing, meaning that reactors deal comparatively less damage to marine or rather fluvial life, and the damage is dealt by the rising temperatures themselves. The French environmental laws have yet to account for that. It's still bad and shouldn't be understated, but is not nearly as bad as one might think. As for the long term, here is a graph of projected losses in 2050 depending on the IPCC scenario compared to the climate of the year 2000. Some reactors barely lose out on anything, even in RCP 8.5, which is catastrophic scenario. Okay. So that's the answer right there. The answer is that it doesn't prevent them from running the power plants. It's that the French regulations prevent them from running the power plants, and that the French regulations are probably out of date and need to be updated. There you go. What is the opinion about nuclear power plants in the US and Germany? We are highly against it, probably because of recent accidents and the nuclear leftovers that you have to preserve for years. Well, okay, so my take on this, and I'm going to bet that it's similar in the UK, but my take from the American public is that the American public is largely not very well educated on nuclear issues. Anybody that is highly educated on nuclear issues is highly in favor of the technology. Now, even if you're highly in favor of the technology, there's still a big problem with it, and that is costs. If Nucor ends up working out, that could make things significantly cheaper, and that could be a big deal, right? But, you know, in the United States, we did have an accident. It was like the worst case scenario. It did melt down, we found out in the end, but it was entirely self-contained. So, you know, there are certainly environmentalists that are like very, very against nuclear power, but they're very misinformed on the issue, is what I've seen. And as for the nuclear waste issue, the United States has done more than other countries, in fact, to deal with this issue. But then they kind of didn't let us use it. So like we built a facility to store it, and the amount, like a Yucca Mountain, oh my gosh, it's crazy. Like the amount of material that you can store at Yucca Mountain will keep us going for like several thousands of years. Like you would never have to build another depository, right? Like the amount of nuclear waste that it actually creates is minimal. And there are another type of reactor called a breeder reactor that can actually use that material. So the waste is not a significant issue. But in terms of like the public opinion about it, the public largely doesn't have a strong opinion. But as it is, I think it's not so much that the American public is against nuclear power so much as it is that they really like the idea of power of wind and solar, right? It's just that, again, those are appearing to not be permanent solutions. There's some problems with those in terms of how much carbon they create and all this stuff. So it's all a really, really interesting subject because, well, it's a lot like economics, where it's like somebody will come in and make a claim and then it's like, well, but it's way more complicated than that. Because yeah, an electric vehicle doesn't burn gas, so it doesn't create emissions directly, but there's still carbon involved in the production of the vehicle, and you still have to get power. And the amount of, first of all, so where does that power come from? Well, it's coming largely from fossil fuels, and it sounds like that these other forms of energy are just not reliable enough to completely fill the gap, which is probably why you need nuclear, or that's like one of the big drivers for nuclear, right? The other thing though is that there's some questions about what we would need to do to our electrical grid to be able to handle everybody having electric vehicles, because it requires significantly more electric infrastructure to be able to charge these things. So you get where I'm going. So I don't think that it's so much that like they're vastly against it. But if you did a poll, I think you probably would see that most Americans are against nuclear power, but most Americans don't know a thing about it. So does that poll really tell you anything useful? You know what I mean? Here's a link. What you got here for me? Oops, wrong button. Need to open it in a new tab. It's so funny that it wants to go to studio.youtube.com instead. Bye Genie. That the media obsession over that story is really interesting to me. Like I was saying earlier, it's like, why does anybody care about Liz Cheney? Nobody likes her. Sustainable guy. This is more of a design limits and regulatory issue more than anything else. They are framing this as a nuclear power problem when it's basically a thermal power plant problem. If I am not mistaken, several coal and gas plants were shut down / running at reduced capacity. Last year it was 4 out of 56. Okay, well, this is interesting. We learned something. Learned a couple of things that might be useful to our investing in the future. Close down that chart. They're not doing so well today, by the way. They're quite down almost 5%. That all kind of started from that story about the Inflation Reduction Act. Well, Treasuries did take another little step down, reached a new low, but quickly pulled back to just the low end of the range. Oh, I haven't been paying attention. Apparently, there must have been a draw on the oil numbers because they've taken a pretty good jump up here this morning now, jumping from $86 or so all the way up to 86.6 at one point. Bitcoin's still about where it is, 6J moving lower. So it seems to me that if anything is driving the treasuries here, that it's probably some correlation with the Japanese yen, but it doesn't look too strong. So I'm kind of looking at it more like I think if I was going to take a trade and try and hold it through to the FOMC minutes, that I would be going short, but that I don't see anything immediate in the order flow that tells me which way orders are going to be going until then, other than that just the trend was down, and I always kind of makes me want to jump in on the trend and go short, right? So that's where we're at here today. And other than that, oil is now the biggest winner on the day. Was at one point soybean and corn, but they've pulled back considerably. Biggest loser now RTY, down 1.85%. So the meme stock's getting hammered. I bet you that my portfolio is not happy today. I bet you, am I going to take another hit on my Sumo Logic? I really find it frustrating because that thing is just totally weighted by beta. And I think that the companies are, I like their product. I think that they're doing some good stuff, and I have good hopes for the future. Okay, so I'm down 1%. I'm down 1% today. And where's it mostly coming from? Oh, well, my Goldman is down the most. What's down the most on a percentage basis, though? Yeah, Sumo down 5%, man. Jeez. Let's come and look at the chart and see how sad it looks. This is a good recovery. It staged a good recovery. I would like to see it back above 10, though, okay? I'd like to see it back above 10. I remember we had this period where I took up an option and I caught some of this thing and it looked really good, and then it came all the way back and expired worthless. I'm so bitter about that one. But, I don't know. Even though it's back 5%, it does, that chart itself doesn't actually look that terrible. Except for when you look at the larger picture, right? You look at the larger picture and you realize it was all the way up at 40 at one point. What? What? Well, I don't know if we will ever get 40 again, but I think that it's worth more than 10. Best American stock you have is Coca-Cola. I don't know. I've kind of resorted, like, I still have some to put into the market. I still have some cash. I did spend some of it though on Berkshire Hathaway, so that's where, because everything that I see that looks like undervalued, it's like Warren Buffett is snatching it up, and I'm like, wow. If that's what I wanted to do anyways, why don't I just let Warren do it for me? That's always fun, because I have this one friend that they decided to become a financial influencer. I don't know how well they're actually doing, but they only post on Instagram. But well, they do have YouTube, but it doesn't do very well, or they haven't. It hasn't. You know, there's not too much content there or views. But on the Instagram, they're always talking about, oh well, you just it's all, let's buy index funds, which is not wrong, but it's just like from an influencer perspective, it's kind of like, okay, so what can you give to people? Yeah, buy index funds. Doesn't everybody know this? Well, apparently there are some people that don't know this, but then where do you go from there? You know, kind of seems a little limiting. But they're always saying, like, you're not going to beat the index fund. And I'm like, my Berkshire Hathaway shares suggest otherwise. My Berkshire Hathaway shares I think they have been outperforming the S&P 500, and I believe, well, not I think they have been. It is a fact. They have outperformed the S&P 500 up until the pandemic, and I think that in the future, they on the next great bull market, that they will continue to outperform because he's bought a lot of good undervalued companies. That's the influencer differentiation when every other ones are telling you to buy crypto or deep out of the money options. Well, it's kind of a difficult thing, actually, because I think in the end, like, my problem is, like, how do you talk to people in a way that, like, it resonates with them? You know, how do you craft a message that resonates with people? And in the area of investing, it seems like the message that resonates with people is, we're going to buy this thing and it's going to make us so much money and we're going to be rich, yada, 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 yada. And just playing into everybody's worst biases, right? The thing that's the most valuable to people is somebody coming in and giving them information that they don't have, that kind of, you know, is a contrary opinion in many cases. Because, you know, the reality of it is that we just don't really know that much about markets. And, you know, how much you can know is a teeny, tiny amount compared to the rest of the market. So the end result is that an influencer that is helping you the most will actually kind of make you less sure about things, because it will make you realize how little we actually can know and predict. And that's not a message that resonates with people, you know? You have to play to people's logic. It's hard to do. I'm holding and buying EDF, an Indian company called Power Grid. I'll look into it. I'm interested. I still have some cash, and I'm interested in investing into nuclear power and energy. I think I maybe got enough energy exposure now through Berkshire, but I would really like to. New Scale is the only big one that I can see. I don't know if buying it at this exact time makes sense. We'd like to see the S&P 500 take a dive here, hopefully. Well, I mean, let's see if they take a dive, and then if New Scale comes back. Because the piece of information that we got was a good piece. It was that their reactor got approved, but there's still some big questions about whether it will actually deliver the cost savings that people want. So, guys, it's time for me to get going. I had a good stream in the long run. I was a little sparse for today, yeah, but I understand. I kind of came in at the very beginning. I was like, oh, I don't feel very good today, so I understand you guys not wanting to come by. Plus, it's still the summer and it's August. I'm excited for September, though. Let's make sure that we're ready for September, yeah? Let's make sure that we're ready for whatever comes at us in September. All right, guys. Stay profitable, friends, or at least don't lose it all.